Hi everyone, hope you're all doing well. Today we have another special episode for you. Part 2, H Invest Henry joins us once again. Henry, how are you doing?
Jacob and I are very ready to catch up on some sleep. I'm doing well. Uh, it's a nice sunny day in London, but yeah, we've been very busy digesting many earnings. I'm doing good. It's lovely to be back and chatting with you, Jacob. And it was hard to decide exactly which companies to talk about today, but we've got four really good ones, which we've talked about a lot on both of our channels, which we're going to really brainstorm and give you our insights on today.
Yeah, 100%. Yeah, we are two broken men. We were just saying before we came on to start this live stream here that knackered. I fell asleep on the sofa last night at 6 o'clock and slept to like 8 o'clock, and then back doing market research, doing all these earnings to half two. Even before the video, I totally forgot I was gonna mention to you D local about the drop last night with that was going on. Not even looked into that one, but I generally think I've got a 8-month-year-old baby at home, and I think I'm more knackered from this season in the stock market than when she was born. That's how tiring it's been these last few weeks.
Sure. Yeah, one man running his own portfolio is a lot to take on, you know.
Yeah, it's been tough. But it gives us a lot to talk about. So we've
It
tried to
does.
pick four stocks that ones that hopefully people want to hear about. Some of these have been making pretty decent moves in the last couple of weeks. The first one we decided to go with is one that we both are big fans of. I think we're especially even bigger fans after those last earnings. I think I
Absolutely.
was quite positive on them. I saw your video. You were quite positive on those earnings from the tone that I got from your video, which is Hims and Hers. So from where we were last time to where we're at right now, Hims and Hers, with the latest earnings, Henry, what are your current thoughts on the situation?
Hymns are building something very special, and they're extremely early in what they're doing. And what I mean by that is that there's certainly a lot of work to be done. But as I said last time, we've got a very stellar management team and a very ambitious company that has historically proven that they can move extremely fast. So what we saw last quarter was we really saw um, them solidifying the transition which is underway, a transition from HIMS, a sort of like an online pharmacy plus, um, yeah, online pharmacy and a way to obtain medication easy without all of the third parties, insurance, going to a physical doctor's office and physical paper with prescriptions on them. That was HIMSS historically. They're now moving into preventative care. And what this really is going to give them, if they can pull it off, and it's a big if because they're still in the early stages, it's just going to give them a huge compounding data advantage. Now that they've got that blood testing facility up and running, and so they're doing that testing at the moment, and they've just expanded. They've launched testosterone already. I don't know if they've launched menopause yet, but if they haven't, it's coming very soon.
Yeah.
And that kind of data has the potential to completely transform the company. And what I like about HIMS is that doing this service of let's actually look at your health, let's give you a service and an MOT. Unfortunately, the way that most people treat their health, and it's not just a fault of theirs, it's a fault of the system overall. Is it's like you buy a new car, which is when you're born and when you're young and when you're fit, but you don't really have your service and your MOT. Yes, you fill it up with petrol, you might give it a clean or do some little things yourself, and that's like the equivalent of exercising, but you don't really have a professional to diagnose what's wrong with you actively. At least most people don't do that in most countries. Even the countries that have nationalized healthcare, they're very strange right now. So you don't have this whole preventative aspect. And that's what HIMS has potential to build as they're obtaining granular data through hormone health. So we're seeing a massive shift. And the reason why I really felt bullish, even though I don't think it's going to show up in the numbers just yet, is the amount of different verticals that they are now starting to deploy, which will
Mm.
generate meaningful revenue in 2026. So they said testosterone will be meaningful. The whole body lab testing that's already started. So that's the blood testing facility that will generate meaningful revenue in 2026. They talked about longevity, which is basically now using that granular data to say you have a deficiency in this, deficiency in this. They can test all types of things in your blood to then ultimately correlate with certain health conditions. Menopause will be meaningful revenue in 2026. And what scared me before was that stagnation in core growth, particularly when GLP-1 has been going through a bit of headwind right now. And what we saw was a record quarterly revenue, and what we saw is we saw that Yemi, the CFO, said that a lot of that slowdown, at least in customers, which I can infer also means revenue, is from their massive legacy category of sexual health being very stagnant. So that means a lot of other of those legacy divisions are probably doing quite well. But it's all about a bet. It's all about a bet that HIMSS, given that they've already got compounding pharmacies, the blood testing facilities, and they've got the distribution, a massive platform, a big trusted brand, and 2 million active subscribers, can transition themselves towards being a huge preventative healthcare company. So I very much liked it, and I like it as an investment even better because the shares have gone down since we last spoke, so it's a better deal.
Yeah,
How about you?
100%. I, I was quite surprised, to be fair. I thought there would be a bit of a, from the shareholder base, I think a lot of people got in because of the hype and the stock and the growth going up 100+% now, whatever it was a few quarters ago. And then we've had the slowdown, and I thought, oh, there's a few people in here that see that revenue slow down. Still exceptional growth, but slow down from where it was. And I thought they'd kind of jump out a little bit. But I didn't expect them to jump out this much, which was the surprise. But yeah, like you were saying, it was a good quarter because it kind of once again clarified that as they enter these new categories and the business gets more diverse, it's going to grow like a weed. And every time they're entering a couple of these TAMs, these TAM potentials are just absolutely massive for them. And that was clear when they talk about some of the new categories that are coming forward. But yeah, I mean, obviously, they had tough comps with these GLP-1s, and they were still growing exceptional rates. Was it 50% revenue growth?
I don't
The,
remember.
the the subscriber growth when you take out the transition that they had going on from, was it the ED situation? I think that was still
Yeah,
going at like 40% subscribers, which is still
it was.
that's pretty good going. The surprising thing that and there wasn't much clarity on, though, is the talk around the Novo partnership. I'm
Hmm.
surprised they talked about that they were looking at a partnership again, and then no analysts kind of pushed on, you know, with the drama that happened of it last time when there was those public press releases going and they were slating each other. I'm so surprised that there was no questions about. So how have you gone from a public Jeremy Kyle slanging match going on to the point of view where you're now trying to get a partnership going
Sure,
again? I,
I
I
know.
just that shocked me. Which I think it would be good if they do have the partnership again. But I just don't understand how they got to that point, and then there wasn't really that much detail given around that. But
Sure.
that would be really good. And then the other side of the platform looks like they're really pushing towards that international expansion probably in the next 12 months. They were obviously mentioning a lot of Canada. I think they mentioned Latin America quite a significant amount. And then obviously they're in the UK, slightly to launch at the moment, but pushing international wise. So we might see more mention of international growth as well coming forward, which, once again, we talk about, the US being so key for them. But if they're able to, I think Canada would be a really easy market for them to go into. But the other markets now, we even talk about the TAM that opens up when they push into those international markets. And
Hmm.
yeah, and like I said, I was looking at the share price drop, and I'm looking at the valuation that's now starting to get to, and I'm thinking, I think you were the same. I actually bought Hims and Hers for the first time since I think the April drop. And I thought, this is a good step up in the right direction. And with the share price drop, I think it's a bit unjustified at the moment.
Well, I wouldn't complain if I can buy
Yeah,
some more at this price.
yeah,
It's
yeah.
excellent. Yeah, you touched on a lot of good points there. Yeah, number one, let's remember that before this news came out that Novo was suing Hims, I think Hims' share price was about $60 to $65 and crashed about 30 to 35% on that day. So obviously the market priced that in. And now you're right that obviously clearly because they're trying to work together, that lawsuit, nothing's going to come of it. And also the fact that they are working together again, or at least trying to build a partnership, What does that say about Novo or a massive pharma company starting to realize the potential of a platform like Hims? You know what I
Mhm.
mean? I'd be very reluctant if it was a company where, yeah, we nearly went into a suing match and now we're actually working together in a partnership. So that's very, very positive for Hims. The international expansion, I think, could add a lot of revenue in 2026. So
Yeah.
this is why I'm confident. Is like I love it. I love the business conceptually. I think they're executing very well, but I also start to see those tangibles show up in the numbers. If we take international expansion, for example, Yemi said potentially 50 million of incremental revenue in the second half of FY25. So that would be, 100 million annual. They're about to do 2.4. So international is already going to make up 4% of revenue, but they only bought Zava in the spring. So,
Mm.
they're getting their components together extremely fast. That's what I love about him. Is they're so organized in building this huge platform. And the new lines of business that they're moving into have huge potential. Absolutely huge potential. You know what I'll show you real quick. This, these are vitamins. Now you may think I'm a bit meticulous, and my girlfriend puts these together for me. And she's done a lot of research on exactly what I need. So these have all got different vitamins in for morning and evening. And this is the kind of thing that Hims could really expand in, customized vitamins. Some women and men, but to a more extent women, have massive iron deficiencies. A lot of
Mm.
people don't know because they don't get blood tested regularly. Imagine the type of flywheel Hims creates when it obtains that data. XYZ, you're deficient in this, that, and the other, and you can make custom vitamins.
Mm. Yeah. It just shows you the
Yeah,
potential that they have to expanding.
it does.
That's it. It's just you're just scratching the surface. I think people always forget like the amount of medical needs and expansion they currently have. It's scary. But I'm looking there and thinking that if they achieve this, I think they once again mentioned the long term guide. So it looks like they're still very sure that they can hit that long term guide. And if they are going to get to 2030 and they're going to do 6.5 billion in revenue and 1.3 billion in adjusted EBITDA by 2030, you're
Yeah,
looking at the market cap right now and it's about an 8 billion market cap. I mean, that's looks good value there if they hit those numbers.
I completely agree. And the barometer that I mentioned last time, I mentioned in my YouTube video, was, let's call it 8 times sales. So that's 6.5 billion in revenue from where they are now. Even that alone is about a 23% CAGR. So that's the compounding rate from their revenue. If you take FY25's midpoint, FY30 of 6.5 billion, that will compound at about 23, maybe it's 24% revenue growth. However, I think at the moment with Hims, there's also improvement for massive margin expansion. Because can this business get
Yeah.
to 20% free cash flow margin? Probably. A 20% free cash flow margin, 8 times sales, 40 times free cash flow, 8 times sales and 6.5 billion, 6.5 times 8, 52 billion market cap, um, is just one idea of where it could potentially be with that growth
Mhm.
plus the margin expansion. So extremely exciting. And I remember when Yemi mentioned that target, it was actually in response to an analyst question. So I think they mentioned it in prepared remarks, but they mentioned it in an analyst question. And just the way he said, our conviction remains high in our ability to meet or exceed, or exceed. That is the exact kind of positive reiteration you want from a
Mm.
management team that's going after the big fish. They're not scared to be confident. They're not scared to work hard and put their chips down on the table. That's the kind of attitude I want to see from a management team.
Mm. Yeah, and a good point there as well about the scale and the profitability. I always forget like these guys and the gross margins they have. Was it 80% gross margins, or did it drop into 70 gross margins? Whatever it is,
Yeah,
you
mid
know,
70s.
yeah, I mean, that's like SaaS type gross margins, and you forget like the level of profitability and gross margins they have, not reflected in a premium at all on that valuation. Because if this was a SaaS company with those gross margins, you're saying there 8 times sales, it'd be a little bit higher than that if that was the case, and that just
It
shows
would.
like you say, the this potential to have to scale up that profitability.
And that's another one of their targets, long-term gross margin targets, mid 70s. So
Mm.
they've also put their chips down on the table that they can sustain that. And I think as they get as they obtain more data advantage, which they will with this new level of granularity from blood testing, etc., they will be able to sustain that because they'll be able to offer so much value to customers. Like it'll be 100 times the value for the same price as the legacy healthcare system could offer.
Yeah, 100%. It sounds like we're
Yeah,
both very much very keen at these sort of valuations.
absolutely. I did mention on my last podcast that I'd reduced my position in HIMS massively, but I ended up buying almost all of it back at about
Oh,
$42 per share after the earnings.
wow. Wow. Must have that earnings call must have really got you going then.
It did. HIMS Club again.
With that one done, really, shall we push on to the next stock, Henry?
Happy, happy.
Cool. So we'll go to our next one, which is Monday.com, which was also another feature last time we talked about stocks. And that has probably had just as much drama as Hims and Hers in that time frame.
Yeah, they've had two earnings calls which really spooked the market in a row, which is why the
Yeah.
shares are historic lows.
Yeah.
5.7 times sales. You want to talk about SaaS? Monday has nearly 90% gross margins. So 5 times forward sales. They're still spending quite a lot on sales and marketing, and they're now at 22 times forward price to free cash flow, forecasted to grow 22% in revenue this year, and their free cash flow margins would be even better, or their price to free cash flow thus would be even lower if they weren't doing the same kind of investment that they were in their platform now, because they've sort of had a bit of an uptick in capex and reinvestment to make some changes to their platform.
Mm.
Yeah. What did you
I'm
think of
just
the
trying.
earnings, and did you buy any more?
I last time we talked I wasn't a shareholder. I am now a shareholder. I've been buying a position and I've been pretty aggressive buying the position, to be fair. Yeah, I don't know why the stock is down so much. Like you were saying there, I think the stock has now fallen below its IPO levels. When you look at the progress they've made since that time frame, they've had the investor day since that time frame, which I thought was very impressive. And on
Hmm.
that investor day, they actually announced a share buyback, which I can't remember how much it exactly was, but I know from where it was previously, it was nearly 10% of the business. So I think that has now pushed the share buyback they announced to probably over 10% of the business that they're now buying back at the moment.
Hmm.
Um, I
And it will
thought the
be
last,
more, I think, now, because I think they probably
yeah, yeah,
staggered it. So now the shares have fallen. It's probably going to be even more than 10%.
yeah, yeah,
Yeah.
which is incredible because we mentioned last time like the balance sheet they have, the cash position they have as well. So hopefully can start deploying that at these sort of levels. That would be great. I looked at last earnings and I actually thought that I was really struggling for why the stock got thrown down so much. The conclusion I came to in the end is that I mean, the talk was the Q4 guide was poor on the revenue, but it was like 1% below the consensus. And I think if we're throwing stocks down 20% for being below the guide by 1%, we are in a very strange place. And
Uh-huh.
the amount of times companies do that, and it's just to manage expectations to go, that's where we're going to come into. So don't go too high on your analyst forecast. And then they'll come out and beat it in a few months' time. They're just managing expectations. I was like, I've never seen a stock get thrown down 20% because of that. I then read it for a third time trying to find something. And I think maybe the operating margins was down 1% on the guide as well. So maybe
Sure.
that's the reason why. But same again, if we're throwing companies down for guiding down 1%, I, I don't know.
It's a strange market, isn't it? Because there's so many talks that we're in a bubble. But Monday.com as a stock, if they continue on their growth path, is certainly not in a bubble. Because as you
Mm,
say, there are all-time lows, some decelerations expected. I completely agree. You know, I would have expected the stock to be down a fair amount if the shares were priced more per perfection. So if Monday was at $300 going into this earnings call
mm,
Q3, I would have expected a bit of a drop. I understand that because Monday are taking a risk with pivoting their business a little bit, and if that pays off, they'll do really well. But if not, then it's tough. But I like the way that they're going, and we can talk about that. But yeah, the Q4 guide was implying 22 to 23% growth. And I think the fact that the revenue growth is like decelerated for 6 quarters in a row. It was 26, and then 26 again. They reported 26, but now they forecasted 22 to 23. I think the market just got a bit shaky. However, I don't think that they are taking into account the fact that this company is actually well positioned. There are risks with Monday.com, like, and we can go through those as well. But 22 times forward price to free cash flow, with a company with, in my opinion, great economics, great management team. It's good risk reward. Not financial advice, but I think it's good risk reward right now.
Yeah, yeah. And have you actively been buying on that drop yourself, or are you sitting on the sides? What's
I actually haven't bought yet in full transparency, but I'm very much thinking of adding, only because I'm trying to keep a certain percentage in cash right now to reinvest
Mm,
in new opportunities. And my cash is constantly fighting to, invest in different places. And my cost basis on Monday is probably 180 or 185. So I'm quite happy with the price that I bought it at. I may dip into a bit much, but there's a lot that I've been wanting to buy post Q3 earnings. So
yeah.
all the money in my portfolio is kind of like, it's kind of fighting. All the stocks are fighting for each bit of that money. And Monday's not one yet, but after doing a refresh on it today, I'm tempted, but I'm not entirely sure yet. Um,
Mm,
what I really like about Monday, I just kind of wanted to give you my top pros and then potentially the top risk. Maybe start with the risk, because I think that obviously the first thing is the guidance is decelerating at a time where the market is extremely in this position of, oh, let's price all of the AI pure plays to infinity, and oh, this is going to get destroyed by AI, this is going to get destroyed by AI, this is going to get destroyed by AI. And that's how the market's kind of pricing things. And exactly the same thing happened with Duolingo. It was literally a mirror of what happened with Monday. Like, their Q4 bookings growth was slow. Um, they're like, oh, ChatGPT is going to destroy Duolingo. Bang, the shares crash. Um,
mm,
and with Monday, I think the fact, what the market's thinking about is, it's true that Google and Microsoft have great distribution on these kind of products, and they've also got very good AI. So I think the market has that in the back of its mind as a negative for Monday.com,
mm,
meaning that if Google and Microsoft can say, let's release this product and this product and this product and get AI to sort of code something, put it into their distribution, that's the risk. The positive side is that whilst Monday's Q4 guidance was slow, that kind of risk has not shown up in the numbers. And what do I
mm,
mean by that? If you look at their customers with more than 100K in ARR, that grew for the fastest time in 5 quarters to 48.4%. So if Microsoft and Google were really disrupting Monday.com, you would see that at the massive enterprise end first. And Monday.com also, for the first time, so this is the point, they moved away from reporting number of customers with 10 plus users, which could be anyone, it could be a tiny little organization. And they
mm,
started reporting customers with 500K or more in ARR as well. And I think that grew 74%. It should be
mm,
on 73% year on year. So I'm not too worried about that side of it yet. And I think the fact that um, Monday, because it's a business that is all about collaboration and people working together, it's very sticky. However, instead of kind of traditionally SaaS would be like, okay, we make an improvement, maybe our customers complain, and we do something else. Monday.com, because you're building your own software into that operating system, that allows an extra degree of stickiness. And the fact that they're moving up market has huge stickiness as well. So they're very, very aggressively going to these enterprise customers that are very sticky, and they can serve them in a way that's incredibly customized to them, because Monday have this AI feature now, and you can build these custom tools. Monday also have a very, very, very basic platform, like a tick to-do list platform for, you and me could use it for free. They're moving away from those kind of things, which is why they're not reporting these customers with 10 plus users anymore, which was only growing about 8%, by the way. So they're much more on enterprise expand than they are on land new customers. And I'm a little bit surprised that the deceleration in revenue growth would be that fast from a pivot. And of course, you've got to allow some deceleration in revenue growth anyway, because they're a very fast growing company. However, on the flip side, I'm reassured because their large enterprise customer growth in 50K plus, ARR plus, that's been pretty stable. But in 100K ARR customers, that has been accelerating. So I'm happy with that. And the other risk is potentially if AI just takes over everything and more people get laid off, which we have seen job openings decline, then the number of seats, if Monday are charging per seat or per person per month, that's a big risk for Monday's business model as well.
Yeah, 100%. I mean, that's why the valuation is where it's at, isn't it? That people are panicking about this AI situation. And I mean, the list of SaaS stocks at the moment that are near 52 close because they're thinking this disruption is going to kill them off. It's quite a big list at the moment, but there's some stocks that, a couple of years ago, you would have snapped your hand off, to get some of these valuations for some of these SaaS models with the growth they have and the potential for these, free cash flow and profit margins going forward. But yeah, I think with the growth rates, I think this is falling into line roughly where the long-term forecast was. So I'm not too
Mm-hmm.
concerned from that point of view because they were kind of spelling it out that this was going to be about the CAGR on the long-term forecast on the investor day. The other thing I would say is that we're yet to see like the growth of some of these new, more AI features that they're bringing in. But I think the one that we recently got, which is is it Monday Service or Monday Development, which I think that's another like AI workflow tool management, isn't it? That's still growing at very good rates at the moment, which makes me think that, a lot of people are concerned about AI taking market share away, but that once again looks like actually people are sticking with the platform because they're developing the next kind of AI tool to help with the workflow at the moment, which is at the moment that I think the market's struggling to work out which of these stocks at the moment are disrupted with AI and which are actually going to benefit and it's actually going to be an accelerator of potential growth for new products for them at the moment. And I guess that's what you're kind of working out for. And I guess like kind of what you're pointing to there is that, the risk element of, that you've got to work out which ones are going to be benefits and which are going to be losers. And at the moment, the market is priced in that Monday.com is a loser from the AI, but that's that's the risk to reward, I guess, if it works out for you or if it doesn't ultimately.
Mm-hmm. Mm-hmm. I would be more worried if they were sticking with SMB. If it was a
Mm,
basic little tool where there's not much switching cost to migrate, because Monday has internal network effects, right? If you
mm,
have a large organization and they're all on the same Monday OS, that's a fantastic network effect. If you've got a whole load of tiny little network effects of 4 or 5 little people in an office, that's not as powerful. And then migrating to something that Microsoft builds or Google builds that you like, that the opportunity cost of that is much lower. And there are other platforms that do similar things, like Smartsheet or Asana, which don't have the same degree of customization and have not got the same kind of aggression when it comes to AI. Monday's a bit more of a younger, hungry company. You know what I mean? I like the fact there's two co-founders working together. They're both still there. There's a
big
good
skin in the
energy
game.
company. Yeah, exactly. They really, really do. They're hardworking pair. And yeah, the fact that they are working very, very hard to not only build great software, but build great software for the individual gives it a lot of stickiness, which is their
And
protection.
yeah, and I guess that stickiness increases because a lot of, from what I heard on the investor day, it sounded like a lot of their clients didn't actually realize they offered more than the one product as well. So the cross selling ability, and then if you all of a sudden you got in, Monday into 2, 3, 4, 5 products in your business, that stickiness of having Monday in your business, comes even better for you, and the cross-selling ability, which I think they said was at 6% of clients buy 2 or more products or something like that. I mean, the
Is
cross-selling
that
ability
all?
there is just,
Wow.
I think they said it was 6% on the investor day, which is incredible when you look at all the new products that Monday.com have been launching recently. It's got a lot of potential there.
That's interesting, Jacob. I thought it would be higher. But then the flip side of that is that then there's a huge market they're still unlocking. And this is what they're talking about. They're sacrificing getting new businesses with 10 or 20 employees and really actually
Mm,
highlighting to their existing customers, this is what we can do for you in the age of AI.
yeah. Yeah, exactly. I think that's the big thing they're trying to do at the moment is they've kind of gone scrap off these smaller customers at the moment. Let's get these bigger customers and start crossing selling to them, and that should do very well for us.
Absolutely. Again, bottom line, number of customers with 100K in ARR re-accelerating. That last figure was 48.4% year-on-year growth. So it's, if you take it on a CAGR perspective, their number of customers with more than 6 figures in annual revenue is basically doubling about once every 18 months.
I'm just double checking that what I said to you then. Yeah, only 6% of our accounts have 2 or more products. Their potential is to get it to 40% is what they're going to target, which is
Wow.
it's not too bad. Gives me another stock that we had that we both owned a while ago, Darktrace. I remember when they went to the cross selling machine, and that ended up doing very well for them when they were able to cross sell.
I remember Darktrace, good old Darktrace. It just never got the premium it deserved, did it?
Yeah.
No.
Anyway, should we move on from Monday.com to another one?
Let's move on to the next one. Yeah.
I can't remember if we said either Duolingo or Shift4 Payments, so I'll let you pick which one I go with.
Okay. I let's do Duolingo only because, as
Mhm.
I mentioned a few minutes ago, there's a few similarities emerging with
Yeah,
Duolingo and Monday.com,
that's true.
and they have, not in terms of business economics, they definitely have different competitive advantages. I'd say the switching cost on Monday.com are extremely high. Duolingo's advantage is less around switching cost and more from improving its app through proprietary data. So they're now making the shift from, let's say you go on Duolingo. Before, it was like you do lesson one, you do lesson two, you do lesson three, fixed decision tree. Now they're moving towards using that data to constantly retrain the AI to work out what's retaining people on the app the longest, what's helping people learn, what is converting people to paid subscribers, and they have hundreds of millions of data points. And their CEO, Louis Van Aan, was previously, he founded Recapture, when you tick a box
Oh
and
yeah, yeah.
select the image with fire hydrants, type in this text. That fundamentally, without going into it too much, is machine learning. So this is somebody with a background in machine learning who founded Recapture in, I believe, the year 2007 and sold it to Alphabet in 2009. He's got a PhD in computer science, and his thesis was about human computation systems. So the thesis with Duolingo, what happened was similar to Monday, Q4 bookings growth forecasted to be very low. I say very low. The growth
Just looking
forecasted
there.
bookings was still about 22%. Um,
Yeah.
so, but yeah, they
It's mental,
talked
isn't it,
about
when you say those growth rates and you go, it's a little bit low, and then you come out with like 20 something percent. You're like, you know,
it's nuts, but Duolingo, they grew 40% revenue last year, and they're still forecasted to do about 37% in revenue this year. It's just bookings leads revenue growth for Duolingo. However, similar to Monday.com, it's all about prioritizing the long-term value of those users that they've got, maximize retention, but grow the daily active users as well. Because that's the engine. You get users first and then you monetize them. So Duolingo, they get users first. Maybe they're on a free model and they see some adverts. Maybe they're on freemium, so sometimes they pay to like unlock the next level, and then they move towards subscription. And now they have 2-tier subscription as well. So they have Duolingo Max, which is like the next level. But that's basically the whole idea with Duolingo is you've got a company now where the education industry is very archaic, and you know this because you mentioned that you're in education, right? And there's a big disconnect between 21st century, the skills we're utilizing in the workplace, and the way the way that we're taught in conventional schools. And Duolingo is helping to become an aid in that education system. So they have languages, they have maths, they now have music, and they also have chess, which is an interesting choice. But the whole point is that in a conventional education system, the way it works, someone writes a syllabus, someone writes a textbook, they kind of guess what the children need to learn. And I'm interested for your thoughts on this because, as I said, I know that you work in the industry, um, and you're all test standardized. The problem
Mm,
is that we all learn at different rates. We all have different methods of learning, and we have different strengths and weaknesses. And Duolingo has potential. Again, like hymns, the vast majority of it is not built yet, but they have potential to use the data that they're collecting on their app to continuously improve learning outcomes for people and scale into, as I said, a personalized education solution. And then the other part of it is just financial, that they are now trading at 23 times forward price to free cash flow. They're trading quite
mm,
expensive on price to revenue, but
mm,
they don't need to do sales and marketing very much anymore. You know,
mm,
the app is universally known. The Duolingo owl, the notification sounds. It's so they only spend 13% of their revenue on sales and marketing. So they have very high free cash flow margins, and that's the whole idea. Is that I think that they are the company that's best positioned for education in the era of AI, growing very fast. You know, they've already raised a whole load of money to build out the back end. They got the free cash flow, and then it becomes a compounding machine. And you think about the
mm.
size of that education market, and Duolingo are a $10 billion company. So that's the basis of the thesis. Let me know if you've got any questions, and I'm happy to go into more detail on any specific areas of that.
Yeah, I mean, it does look interesting because, like we were just saying there, the growth rates still look pretty good. To say the concern about growth rates, they still look pretty good at the moment. My only, I really want to look at this one, but I've just not been able to get any time to go into a bit of a deep dive with it at all yet. But I'd really like to have a deep dive into this one. My major concern with it, without having to do any research, so I might sound absolutely stupid, is just the competition aspect. I just don't know how easy this is to disrupt, and if a competitor could come in and disrupt it, how, what's the moat, how sticky it is for people to stay into the platform. But what I've heard from it, one of the big steps in the right direction is that people are actually starting to take the language learning uh, awards, or I don't know what the correct term for this is, a little bit more serious, where they're actually getting recognized a little bit. And I'm sure I've heard somewhere that they are pushing to have what, like I said, I'm very low on the research on it, but the rewards for what you learn on there, as say your certificate or what have you, can get recognized when you're going into like further aspects of like education potentially.
Mm-hmm.
And I think that is potentially a major step forward. If you go from this spare time this thing you do in your spare time can actually then improve your CV substantially, where it could help you access, I think there's some parts that do, you probably know this, get is supported and recognized by like universities or something like that. But the
Absolutely.
more that could get built up, that could be a really, a sticky thing for them, where, that could be a major growth driver for them ultimately. The only thing I've had a quick look when you were talking there, the balance sheet looks very good. Great balance sheet there. And they look like they make pretty decent levels of profitability, no debt on there. I'm surprised with the drop that they've been on. That we had the same conversation with Monday.com when we last talked about it. They've not been buying any shares back at the moment, which I'm really surprised by with the drop that they've been on. But yeah, there's a couple of points there, Henry. I don't know if there's any that you want to come back with.
So they do break down their revenue. It's a very good point, actually, and I should have mentioned this. They do break down their revenue by app revenue, and then they have the Duolingo English test. And you're right, it's very accredited. I remember I looked at this back in 2023. I'd actually invested in Duolingo at one point in 2023. Um, and I found a whole load of universities in the UK some very reputable ones. I remember that University of Bristol was on the list, for example. A lot of very reputable unis. I think one of the London unis, Imperial or UCL, was on the list as the Duolingo English test is an acceptable barometer to measure your English competency when applying for universities in a language, or so the course is structured in a language that's not your mother tongue or not your native language. And that was incredibly interesting to see because you're right. As Duolingo, I don't know if it's their main focus right now because I think the app is almost got a bit more playful, if you see what I'm saying. So
Mm.
that it Duolingo English test, they don't mention it as much, and it's not growing astronomically fast compared to the actual app revenue. However, that's a huge vertical for them in the future. You're absolutely right. I have a feeling that in the near term, they're going to concentrate on continuing to improve this app, probably for the younger generation, or what I mean, like children. But then again, there's official accreditations that could come from that. And they've now also, for example, added a quantitative score that you get for certain languages. So you can say, I'm a 25 in French, I'm a 7 in Russian. So you actually kind of have a bit of an accreditation example coming in there. Um, but yeah, I think it's a really interesting company. They certainly do have the option to buy back a lot of shares, and maybe that's something that they're going to consider doing more of now the shares are at a very big low. I don't know if they'll go down that route or if they'll go down the right, let's up our capex and reinvest in AI. There was a chart that came out a couple of days ago, allegedly leaked from ChatGPT. I don't know if you saw it, and it was about how many tokens companies were using. And Duolingo was one of the top companies in terms of utilizing ChatGPT tokens. So they spent the most. So they're
Right.
really utilizing AI at the same time.
Hmm. Yeah, I think if they're able to, like I say, get more, I think if they can get a little bit more tied into the education system, because I don't think it's on, well, I know it's not on the UK school curriculum at the moment, like just things like that getting tied in there, that would be, I think, a really good moat driver for them. And then you think about all the faces that would be in front of because people are using it a regular day and then they'll take that home with them. That could be something that they
Mm,
really expand on if they're able to get those sort of ties. I don't know. Like I
absolutely.
said, I don't know where if that's something that they're pushing for or if they're it's something they're keen on. But
Hmm. I think that that's going to be way down the line. It is ultimately, I think, where they're going. But you're right. I think that it'll be very slow to get it into the mainstream education sector in terms of actually being in schools. However, I'm
mm,
not too concerned about that because they're obviously a consumer company right now. So, they've got that existing revenue driver. If they were trying to build this out for the public sector first, I would have a lot of concern. I think more what's going to happen, for better or for worse, is you're going to end up having children doing conventional homework or trying to focus on conventional homework. And just the whole way that our brains are wired around instant gratification and the amount of 10-year-olds are going to have smartphones these days, there's just going to be a big disconnect between how children learn in the private sector, sorry, in the public sector or in school, and how they're actually interpreting information in the rest of their day-to-day lives. And I think that that's eventually where Duolingo will start to creep in.
mm, yeah. Where are you at with building out a position in this one, Henry? Then are you still actively buying at the moment? Did you buy after the drop?
So as I said, I was on and off as a shareholder from about $90 in early 23,
Oh
and
well.
bought I bought in September of again for the third time. So I didn't have a position in 2025. I bought in September of 2025 at roughly 280 as a small position, and after these earnings plus increasing conviction in the stock, I decided to actually triple that position.
Oh wow.
Yeah.
Wow, that's some conviction, is
So
that?
it's gone from being a sort of smaller position to now one of my core holdings. So very exciting stuff. As I said, everything I'm talking about is way down the line. I'm just trying to imagine who's going to be there in transforming the educational industry, and I think Duolingo have a good shot.
Yeah, yeah. I really need to do some research on it whenever I get some time, because it does certainly look an interesting one. It seems like we were just saying there, Monday.com, Duolingo, both stocks that just seem to be not liked at the moment, because as soon as you mention AI and disruption, they seem to just think it's going to be a dead business, and sometimes it can create great opportunities.
Hmm. Yeah, I think in both cases, the AI risk is overstated, particularly with Duolingo, because they, as much as language data or maths data is public, the data, as I said, of how people learn and their responses on the app, that's unique to Duolingo. So you have unique data you can train on the AI and make your app incredibly powerful. With Monday, they haven't got that same data advantage, but as we said, very sticky, very AI first still, and fantastic growth in their enterprise customers, which are sticky and have big network effects.
Hmm. Great stuff. Shall we move on to our final stock of the day?
Let's do it. Shift4. So, yeah, you can start with this one, Jacob. I know that you are a shareholder and I'm not. So I'm interested to hear the basics of the thesis, and we can take it from there.
Yeah, no problem. So I recently came a Shift4 shareholder, I think about 2 months ago, potentially, something around that time frame.
Hmm.
So I looked at Shift4 Payments, and to be honest with you, the interest started a while ago, because there was a stock that I think you may have even owned it. I can't remember. Toast. Throwing
Uh
false
huh.
information out there. Did,
I've
uh, did
not
you did
owned.
you own, or were you interested
No,
in it? I
I've
can't
not owned
remember.
Toast, but it is a company that I have done a deep dive on in the past.
Yeah, so originally my interest was with Toast, and I thought this looks a really. I went to the US, and I didn't really pay much attention to it, and then I noticed Toast being everywhere,
Uh huh.
in basically a lot of the restaurants, and I was like, this is actually a really good system. The staff seem to be enjoying it. Seems like it's connecting to the kitchen and what food you're ordering very well, and everywhere had it. And I thought, oh, this is doing really well. And the next thing I know, Toast stock had gone absolutely fine, and I thought I missed that opportunity. And then I was introduced to Shift4 Payments, and I had a look at Shift4 Payments, and very similar to Toast, with the point of sale software that they have. And when I looked into Shift4 Payments, I actually looked at it and thought, I actually like this more than Toast, than the one that I was originally interested in. The reason why Shift4 took a bit more of an interest to someone like a Toast, for example, is because Shift4 Payments they do the restaurant space, which I think they're like the number two player behind Toast in it, but they have more accelerated into the likes of hospitality and leisure. So being at the likes of the stadiums and hotels, for example, which with a World Cup coming up, by the way, could be a
Very
really
true.
good catalyst for them next year. But yeah, the point of sale system in the likes of stadium, and then basically what they do is, if you are going through the stadium and you want to buy a drink, you'd use the point of sale system there, but also links it up to, like, if you're going into the car park, you're using the same sort of system in the car park. If you go into the stadium itself on the ticketing machine, if you're buying tickets, for example, everything that is payment related in the stadium then links up to the Shift4 payment system, which is great for the people that are using it, because then they're getting all this data through that one platform rather than multiple platforms. So it's all links up, easy to communicate inside the stadium between all these payments that are going through, and easier for Shift4 payment for the company that's using Shift4 Payments, because it's all there. Now, the other thing as well with Shift4 Payments compared to someone like a Toast that I liked is because they're in this leisure space and you're in this hospitality space. When you're going into a restaurant, imagine you go into McDonald's, you're going to spend what, $10, for example, in McDonald's. I don't know. I've not been into McDonald's in the US for a few years, and inflation's gone a little bit sky high since then. So I couldn't tell you what a Happy Meal price is in McDonald's nowadays, but let's just say $10 for argument's sake. So if you go into there, at $10, right? If you go into a stadium and you paying for a ticket, you're buying like a shirt at the club you're at. If you're buying a pint, which are crazy expensive in America, by the way, that really surprised me how much pints are in America. But anyway, the cost total you're coming to is actually a higher amount. Now, if you're taking a fee of the processing payment of that, the money that you're making off like a leisure and hospitality, which they're number one in and expanded into before what like Toast has, you make more money and you also make more profit off that sort of that sale there. So that's why I like Shift4 Payments, because if you compare them to Toast, they actually have they're doing a bit of an investment phase, so it's not really showing through in the numbers exactly at the moment, but they're able to get to a lot higher level of profitability than someone like a Toast, for example, which is obviously great. They've also expanded into international a lot quicker than Toast. So they've been taking a lot of market share there. And obviously, when you get the first mover advantage, that can also do quite well for you. And an interesting tactic that Shift4 Payments are using, and this is probably one of the negatives on probably the biggest negative that I have on Shift4 Payments, is the balance sheet. It is a little bit ugly. There is a little bit of debt on there. They have been making a lot of acquisitions, but these acquisitions that they're making, they're actually buying out other like companies that are businesses that are using other payments processors, and then they take them on there, and then they cross sell all the things that they have into these companies. So whereas Toast at the moment, they spend a lot on sales and marketing to try and get these clients, whereas Shift4 Payments go with the tactic of, oh, we acquire you as a customer and then we cross-sell you. And that's what they've also had a lot of success from. So another example right now is, I can't even remember the full name of the company, but they made it, is it Ocean Blue? It's something blue that they've bought recently,
Oh,
which
the
is
big
like
acquisition.
Yeah, I can't even remember what the
It
exact
is
name is.
called. It is called. Wait. It'll come to me. I might even have it written
It's
down.
it's
Blue
it's
Globe.
it,
Globe.
Blue Global. There we go. I
Yeah.
know it blue something. I just couldn't remember what the blue thing was. So they made that acquisition there, and that's like into the luxury space now. So they've got a lot of clients through the luxury space, but that's also another thing that they've added into the system that they have now that a lot of other point of sales won't have, is where you go. Let's say you're I don't know, a citizen from China, you come to holiday in the UK, and obviously, well, maybe not as much in the UK now because we've actually changed it, but you get the certain tax breaks when you buy an item,
Hmm.
and it can be an absolute nightmare, like realizing what tax refund or rebate you would get when you go to the airport. So it's like bought that system now that basically sorts it all out for you, and all you need to do is go to the airport and hand a receipt over and go, that's what you need to pay me back. Which obviously then is great for these luxury companies because it will incentivize like the people that are coming to like get to do these purchases, because if you buy it from that system, it's easy to get the refund and the rebate from these luxury goods. Last point I'll make, because I'm rambling on a little bit here, but the latest earnings were good. I thought the growth was great. The Everything else inside the business looks like it going in the right direction. They announced a share buyback, which I believe, off the top of my head, I've not got it written down. I think it was $1 billion. That
Holy
they go,
moly!
yeah,
Really?
that they're gonna,
Market cap's
that they,
5 billion. Jesus.
yeah. It was a very big amount. It was over
Wow.
10% of the market cap at least, which
Yeah, 20.
is which I think
Or
gives.
about
uh,
14% of the enterprise value. Sorry to interrupt. Because this is
yeah,
the other thing
no,
is that
no,
they're probably in about 2 billion of net debt. So it'd be
yeah,
20% of the market cap or 14% of the, sorry, 20% of the market cap, 14% of the enterprise value of 1 billion, which
yeah,
is
yeah,
huge. And it's even
yeah,
bigger
yeah,
than Monday. Yeah.
yeah. It was a really significant amount, and I think that a few people are being concerned because if they do, because I think on a forward P something like it's like 10 times forward earnings or something like that, which is incredible for a company growing at like 20-30%.
Sure.
And I think a few people are like, are they actually going to hit that profit? But I think if you're willing to commit that much of a share buyback in, then I think that kind of suggests that, you are going to see those levels of profitability come out with them. But yeah, I mean, I could say a couple more points, but I think I've been talking there for a good 5 minutes. So if you want to say anything, Henry, I'll let you jump in.
You've really opened up my curiosity to Shift4. So thank you. And it was kind of there in the back, but now I want to do a really big deep dive on it. It's a company that, as you say, is very sticky, and that because of the nature of the businesses that Shift4 go after, I mean, not only is there potential for more revenue to be made, there's also very very high stickiness. Um, and I guess Toast is sticky in its own right, but Toast, because they go after more the small and medium sized businesses, and Toast are restaurants
Yeah.
only, right? So that's the
Mhm.
problem, is like Shift4, they have such a breadth of business, and they have so many massive enterprise clients. That makes it so much more sticky than I imagine for Toast. A large percentage of their customer base is mum and pop shops, and Toast
Mm,
has its switching costs in its own right. And from what I understand, Toast has much better SaaS in the restaurant industry. So their actual analytics on the software side is really, really good. Another difference is Shift4 appeals much more to enterprise because at
mm,
that scale, guess what? Shift4 actually built the payments processing network completely. So they've got the same kind of thing as Fiserv. And Toast, again, Toast don't really compete in the enterprise space. They don't have that. Block doesn't have that either. Block is like small, medium-sized business, and I
mm,
really like the stickiness, as I mentioned, of Shift4's platform. I think it's very, very clever. And as long as they don't give merchants a reason to switch, that's it. There's also stickiness from the point of, I imagine they do quite a lot of software insights, in terms of
mhm,
like
mhm. Yeah, yeah, yeah,
analytics within the business, like,
yeah.
oh, we should keep the coffee shop open an extra half hour because people are buying more coffees at 10:30. We close at 11, and everyone's trying to buy coffee at 10:55. We should keep the coffee open till 11:30. This kind of stuff. Um, and then the big puzzle, as you mentioned, I haven't looked into the granularity of the financial statements, but I am aware. Again, I've got it written down: 5 billion in market cap, 7 billion ish in enterprise value. Um, and I know that the CFO resigned. Also, Jared Eisenman left, and I know that the CEO that resigned also was only there from 2022. And that's the main thing is I want to check is I just want to check their fiscal discipline, and try to understand it. Because let's say if we just disregarded everything I said about Shift4 as a business and purely looked at some numbers without even knowing what the business did, you've got a business growing in revenue growth in the high 20s for the past 3 years with almost no deceleration. I do understand a lot of that is inorganic, which we can discuss further if you want. And I need to work out exactly what proportion of that comes from acquisitions, etc. Expanding gross margins, expanding free cash flow margins. As you said, trading at very low teens forward earnings and forward free cash flow. Um, and if they can manage the debt situation, it's interesting they're doing a buyback rather than paying off the debt, but maybe that's just the conviction they
Mm,
have that the share price is so low. Because typically a
mm,
company would pay off their debt. I've also got here for the first 3 quarters of this year, so 9 months year to date, 555 million in EBITDA, but 129 million of that is going to paying interest on debt. So that's how much debt they're in. At the same
mm,
time, it's not like they're growing 5% with losses and share dilution. If you have share dilution and massive debt at the same time, then you're in for disaster. But we've actually got a company making great cash flow, potentially buying back its shares. So I actually don't have any qualms with the business as per se. I think that it's worth looking into how much of the Fiserv drop would be linked to Shift4. There's obviously quite a lot of cyclicality risk if we get a big recession. Their spending will slow, but it's not going to destroy the company. Um, yeah, I think the main thing is just actually trying to work out that piece in their financial statements.
mhm. Yeah, yeah, yeah. I understand that completely. Yeah, like I said, that I agree. The debt is the thing that really like I'm a bit ish on. But with the share buyback, yeah, I agree. I originally thought like, would they not be better off paying down the debt? But then you do look at the share price and you think, well, why at this sort of share price are you better off taking advantage of it? And if you have
Mm,
confidence that as long as you can manage the cash and the debt, you just let that go for a little bit. And when you do look, they still have a pretty decent cash balance, I think, of like 1 billion or something. They are expected to generate decent amounts of profitability every year, which is, I think next year is like 500 million or something like that. So if you are
wow.
generating 500 million of profit or something, sorry, it's 300 million. It's the year after, I think that's 500 million. Then you profit generating decent levels. You've still got a bit of cash. You know, maybe why not take advantage of the dip at the moment? And I guess the other
Sure.
obvious risk that you do have is, a recession, and people don't go out to hospitality and leisure places like NFL stadiums because of the recession. It's people losing jobs and everything. But I always say that that's ultimately like a risk with every business that you normally invest in, to be fair. So I'm not always too big on that side of it. Organic growth, I think you said about, I think off the top of my head, it was 19%.
Organic.
I think, yeah, I
Mm-hmm.
think so off the last earnings. Probably worth double checking, but that's the number I've got in my head when you said it. With it inside in front of it, I'm actually not too fussed on what's going on with the management team. I think Jared Isaacman, he's left because he's going to go run NASA, I believe. So
Fair
that's why
play.
he's leaving.
I know he's
However,
friends with Musk.
yeah,
I
yeah,
can't.
yeah.
It can't be a bad thing if someone. I've read Musk's biography by Walter Isaacman, coincidentally enough, and I don't think they're related. But the point is that Musk finds extremely intelligent people very boring, just because we can all agree he's next level. If someone's friends with Musk, it's a good little point, that he built Shift4. He must have some brains in him.
Yeah, yeah. But he, even though he's leaving, he still bought a significant amount of shares inside the business in August. So he bought about $16 million worth of shares in
Right.
August time. And that was at $83, I believe it was. So it's
Mm,
$73 now. So it's a little bit lower where he even bought in August time. And then I believe the new CEO, I'm just trying to remember back to the Investor Day, which is a brilliant watch with a lot of information there. He is, I think, the old CFO, I believe, or if he's not the
really
CFO, he's promoted internally from the business, which is
nice.
always a good sign when you've got an internal candidate and they kind of go, he's the next guy to come in and run the business. And
Hmm.
when I was listening to him, yeah, he sounded really good, to be fair. So I'm okay with this shift around in the management team. And if you're stepping away from the business as the founder, and you're still willing to buy the stake in the business with a change in management team, I think that's a real confident sign of like he thinks it's in safe hands. And I think that's
Sure.
already on top of a stake that he has inside the business of like 4-5%, I think, Jared Isaacman. So the fact that he's still owns his stake and then increasing it seems like he's still pretty confident in the direction of the business, even with the current management team.
Excellent. Are they voting shares? He might be wanting to
No idea.
retain some control.
Not sure. Not
Mm.
sure.
Anyway, it's good that he's still involved somewhat. And we talked about Musk as then. It's like, yeah, I know Musk is still officially CEO of Tesla, but imagine how much that guy has on his plate. So it's good that I'm not saying that it proves that Alzheimer is smart that he's friends with Musk, but at least if he's still going to be there in the background, um, that's fantastic. And fair play to him. If he's been running this since he was 16, it's not quite as sexy as flying rockets and working with NASA and being an astronaut and all this kind of stuff. So fair play to him if he wants to go and do something else. He's now like
Yeah.
40, so good for him.
Yeah.
Um,
And I think he's still staying on the board as well, isn't he? He's still staying as the executive chairman, isn't he? I think.
I'm not sure, but if he is, then that's great.
Yeah. So I think he still has
Yeah.
interest inside the business. Yeah.
Okay. Brilliant. I really appreciate your analysis on that, and I do think that Shift4, given that given what we've talked about, it's probably mispriced. I understand there are some risks there. We talked about financial risks, but you look at Toast's at 19 times gross profit and Shift4's at 5. Toast's
Yeah.
at 41 times forward free cash flow, Shift4's at 13. As you say, very low double digit forward PE. And it's my favorite thing ever, the fact that revenue growth has been very sustained, even if it's only 19% organic. I want to look at how much organic growth has decelerated. It's still very impressive. And I understand this is the kind of business where, because you're working with very, very, very large vendors, I understand why you would need to acquire, because they're so slow at changing customers. So I don't want to be too harsh on Shift4 for making acquisitions, as long as they're well thought out acquisitions.
Yeah. I 100% agree. Like I said, when I was looking at the business, one of my favorite things to do is just look at the competitors and look at how they're growing in the same sort of aspects. But then also looking at the valuation metrics, and like you were saying there, with some of the examples, I looked at the valuation it was trading at. I'm thinking, even if you double the valuation of where Shift4 is currently trading at, it's
Sure.
still like relatively like even half of what the competitors are at, which then to me is screaming, well, there's some form of big disconnect going on here.
There is. Yeah, you could. Yeah, Shift 4 shares could double from 75 to 150, and it'd still be difficult to make the case that they would be overvalued, given if their debt situation and everything's going to be fine. So you're
Mhm.
right. It's financially on the surface, it looks extremely interesting. Very good risk reward, and they're the cheapest they've been in a long time. Like actually, not Hims, but both Monday and Duolingo, Shift4 are basically the cheapest they've ever been. Because since that low that they hit of $30, $40 in late 2022, their growth has outpaced the share price. So the share price has doubled since that very, very low, but so has the revenue, and the free cash flow, I think, has more than doubled since that period.
Mhm. Yeah, yeah. I was just going to say as well, I don't know if you've seen the long-term outlook that they've given as well on the Investor Day. I was just trying to load it up there where you were just talking. But if they
Uh-huh.
get anywhere close to what they're expecting to do on the long-term outlook, it's at this sort of level, it does it does look pretty good upside.
Well, I know what I'm doing tomorrow. Thanks, Jacob.
I'm just trying to load it up now just to see. Typical on these investor days, they have like 100 slides, and the long term outlook is normally like slide 99. So I'm just trying to
Oh, I
scroll
see.
down. Yeah, I've got it here. So they sit on the hand case. So the low side here is for a 3-year CAGR at high teens of gross revenue.
Hmm.
Um, which is the same for adjusted EBITDA. The what they call the most likely case and the top case here is that in the next 3 years they grow gross revenue at a 3-year CAGR of 30% and adjusted EBITDA CAGR of 30%.
Wow.
And I mean, if you wanted to go low side or high side, either one of those at these sort of valuations, I mean, even the low side looks very good potential return. But if they do hit what they call the most likely case, I mean, for a company growing gross revenue at 30% CAGR and EBITDA's at 30% gross CAGR at what I would say it was 10 times next year's numbers.
Hmm.
I'd never seen that before, and I don't know if it's just because of the debt aspects why it's put it down to such a low metric because of that. But even if you work in the debt there, I just don't understand really.
Mm. I'm going to do a very, very deep dig on this company and write down all the things that are bad about it and work out how they can mitigate it. Because if they can
Yeah.
mitigate all of them, then you're right. This company deserves a much, much, much higher multiple. It might be as well. I don't know what their highest market cap ever was, but they probably got up to about 9 or 10 billion, like towards the end of 2024.
Hmm.
So maybe it's just not quite at that inflection point where it's priced fairly because there's enough big institutional money movers in the market really looking at it on a granular level. Because this is the
Hmm.
problem you've got with a lot of stocks is like, yeah, now, Toast spiraled, Toast hit that point, and now Toast's market cap, I think it's about $20 billion or over $20 billion. Once you get to that point, there's so many more big equity research analysts looking at it. The point is not so much the big equity research analysts, but the funds that they run and the ratings that they give have so much merit because they go to institutional fund managers, or on the sell side, the banks have their own funds as well sometimes. Um, and with Shift 4 at 5 billion market cap, so many people pass it over because they can't afford to look at it. They
Hmm.
cannot, because if they're running say a 100 billion fund, I know that sounds big, but a lot of large funds are 100 billion. A 1% position is a billion, which is 20% of Shift4's market cap. But
Hmm.
you can come along as a 4-figure, 5-figure retail investor and put a bit of money into Shift4. I mean, even 6 or 7, right? And not move the market, get in it liquidly, make it a 5% position if you wanted to. A lot of investment funds and thus a lot of people that analyze this kind of stuff and are good at pricing it fairly, they just don't have that opportunity at a 5 billion market cap.
Hmm. Yeah, that's so true. I think so. I don't know if it was Monday.com actually. I know we just covered it a second ago, and it's probably the wrong segment. But they were saying like the amount of interest now because of the company size is like 4 times the amount of people that are now listening to the investor day to where they were like 3 or 4 years ago. And you just imagine all
Yeah.
those eyes that are willing to potentially put money into a business, and then that's how just having more awareness can sometimes lead to more money being invested inside your business.
But that's the point: is you have all of these institutions now looking at, say, Monday. If they all buy the dip, but they all want to make Monday at least more than a negligible position, that can channel the share price up very quickly because there's only about 9-10 billion a market cap to buy up, and these are
Mm,
people with big pockets. When I buy a share, I don't move the market, but these guys really do when they buy shares.
mm,
So it's
yeah.
interesting, and Monday, a lot of the sort of very small SaaS that I look at, or platform as a service as well, that's in that market cap range, they've just gone very like sideways. The interesting thing about Monday.com, the share price kind of broadly followed the S&P and the Nasdaq. Obviously, they crashed post IPO, which is great because they raised so much money in 2021. So let's not worry about that. But they crashed and they followed the sort of Nasdaq and S&P up. Like the share price was quite steady. Every time they have an earnings, the stock would either dip or go up. But now they've really disconnected from that for the first time, where the
Mm,
fundamentals are not as bad as they seem, in my opinion. So
yeah,
Monday is
yeah,
an interesting play.
yeah. I love how we were talking about Shift4 and we still got to Monday.com.
Yeah, we did. I think Monday is a very fascinating company, an interesting play, and I know that is one we're both very excited about.
Cool. I think we're just over the hour mark there, and I think it's a good time to spot. But hopefully
Good
to
time to
stop.
sleep.
Sorry. Yeah, sleep. Yeah. But hopefully the viewers enjoy. Hopefully a step up in the camera quality and the audio quality this time. We did try and make some a little bit of improvements, and hopefully for the guys that are listening and managed to stick it out for an hour, there was some useful information on 4 stocks there.
Thank you very much for listening, and thank you for having me on, Jacob. Any questions, please post them in the comments, and I'll be happy to discuss with you further.
Yep. And if once again, if you're viewing this on my channel, a lot of you guys jumped across and gave Henry a sub last time. But if any of you guys listened to it this time and found the information useful and you didn't jump across last time, go jump this time and go give him a little bit of a subscribe over there.
And likewise to Jacob. Are you at 20K yet, Jacob? I remember
Oh,
19.9
I'm
still.
so close.
You're so close. Guys,
So
let's get
close.
Jacob to 20K. Let's get Jacob to 20K, please.
I've been stuck on 19,900 for the last month, and it's getting there. It's getting
Uh-huh.
there. I think we're 39 subscribers away. So yeah, be a good Christmas present.
It would be a good Christmas present. Let's
Yeah,
get them there for year end.
yeah. Great stuff.
Yeah.
Thanks for giving up your time, Henry. Thank you so much for joining us again.
Thanks, Jacob. It's been a pleasure.